What if I told you the richest people in America are quietly abandoning banks, not switching banks, leaving them altogether? Instead, billionaires are pouring trillions into something called private credit, a market most everyday investors barely understand. And here's the crazy part. This shift could completely change how money, loans, and investing work in the United States. So the question is, why are the wealthy moving away from traditional banks? And what do they know that you don't? Let's break it down. Welcome back to the channel. If you want to stay ahead of financial trends and learn how money really works in America, hit that subscribe button. Today, we're diving into one of the biggest hidden trends in finance right now, the private credit boom. Private credit is basically when non-bank lenders, like investment firms or wealthy individuals, lend money directly to businesses. No traditional bank involved. Instead of going to a bank for a loan, companies go to private investors. These investors provide funding, and in return, they earn high interest, often much higher than what banks offer. Think of it like this. Banks are becoming the middlemen, and private credit is cutting them out. This market has exploded in recent years and is now worth trillions of dollars, and it's growing fast. 1. Higher returns. Banks offer relatively low returns. Private credit? It can generate 8% to 12% or even more annually. For billionaires, that's a massive difference. 2. More control. When wealthy investors lend directly, they control the terms, interest rates, timelines, and risk levels. They're not relying on bank policies or regulations. 3. Banks are getting stricter. After financial crises and tighter regulations, banks have become more cautious. That means fewer loans, more paperwork, and slower approvals. Private lenders step in to fill that gap fast. 4. Less regulation. Private credit operates with fewer restrictions compared to traditional banking. For big investors, that means flexibility and opportunity. There are three major forces behind this explosion: rising interest rates. Higher rates mean lenders can charge more and earn more. Banking instability. Recent bank failures and financial uncertainty have shaken trust in traditional systems. Wealthy investors want alternatives. Demand from businesses, small and mid-sized companies still need funding, but banks are saying no more often. Private credit is stepping in as the new solution. Now, this isn't all upside. Private credit comes with risks most people ignore: less transparency, higher default risk, limited liquidity. Your money can get locked in. And here's the key point. Just because billionaires are doing it doesn't mean it's safe for everyone. They can absorb losses. Most people can't. So why should you care? Because this shift is changing the entire financial system. Banks are losing power. Alternative investments are rising. Passive income opportunities are evolving. In the future, you may not even need a bank to borrow or invest money. That's how big this trend is. The private credit boom isn't just a trend, it's a financial shift happening right now. And the people who understand it early will have the biggest advantage. If you found this valuable, like the video and subscribe for more high-level finance insights. And tell me in the comments, would you trust private lending over banks?